know that you have so many choices as a buyer today. New projects, pre-launch projects, under construction projects and ready to move in flats. Almost all the time we tell you on the show that hey, be careful, make sure you buy something that you can see in front of you. But sometimes it might not suit your pocket. So what are the pros and cons of buying one over the other? To help you decide that, we've got Harsh Rungta, SEBI registered investment advisor and founder harshroongta.com. Harsh, always good to have you back here on the Property Show.
It's a real pleasure, Manisha.
All right, so I know there's a trust crisis and we tend to take the buyer to safe havens, but then a lot of buyers still write into us, and we've taken 2 questions for pre-launch projects today. Where they've said, can I go ahead and buy that? And of course, if it's a good rich project, we say, all right, take that risk, right? But a lot of them can't even afford to, they need that period to be able to make a payment. So can you run us through first, why is it that ready to move in makes sense?
So I think just 2 points, Manisha. I think when people talk of real estate investment, I think by default, that should mean ready to move in. When you're buying anything else, if you're buying an under construction property or you're buying pre-launch, it might be good. It's like investments, right? For one investor, it's a fixed deposit with the State Bank of India. For another investor, he would be willing to look at AAA rated corporate deposits, whereas a third investor would be willing to look at lower rated debentures from smaller companies. It depends on your risk profile. As long as the investor is aware of what he is getting into, I think there is nothing such as good or bad. I think the issue with under construction property is that people think that they are buying property. They are not. They are buying a promise. As I like to say, when you're buying an under construction property or when you're buying pre-launch, what you're really doing, you're not buying property. You are actually getting into risky lending business. Yes, it should logically give you it better give you a high return, you're taking a very high risk. I think so that really what constitutes property.
I get that. Okay.
So if I now come back to what is the, sorry.
No, I think you've really put that well, saying that if you're buying real estate, then it should be ready to move in. Otherwise, what you're buying is a promise and what you're doing is funding a developer.
Absolutely. You're in a risky lending business and many times the risk pays off sooner or later. It better give you a return because you're taking a big risk, right? When you buy a ready to move in property, the only return you get is the return because of the increase in property prices. Whereas when you buy an under construction or a pre-launch property, you get 2 returns. One is a return of the underlying property prices. 2, as the risk reduces, as the project progresses, as the risk premium reduces, the price inches towards property. From a promise, it inches towards property. So that is that additional return that you get from an under construction project, which you should, because you're taking a much larger risk. It is, would you put in a deposit in a cooperative bank at the same rate as what you would put in a State Bank of India? It's that simple.
It's as simple as that. I get that. So I understand that. So, we've been actually looking at all the price charts that Lysis has been giving us and actually seen that in most markets across India, your now annualized returns over last 3.5 to 4 years, if you look at real estate, have moderated to below 5%. Even in the markets which were very resilient like Pune and growing because on the back of IT growth, both Pune and Bangalore have now seen very, very moderate price increases. Would you say or would you recommend that this is a good time for an end buyer to actually head out, look at a ready to move in apartment and then take that call and make that bet?
So I presume when you say an end buyer means somebody who's buying it to stay in.
Absolutely.
And obviously if you're buying something to stay in, then again that's not a property purchase. Your home, yes, it has a lot of value, it probably increases in value, but unless there is a huge emergency, you are unlikely to downgrade. You are unlikely to sell that and sort of stay in lower or a less costly premises. So,
Right.
the point is that's an investment that is like say personal jewelry, which has value in the event of an emergency, but very unlikely that you are going to ever liquidate it. So, again it's not a property investment, and for somebody who wants to buy for his own purpose, for own stay purposes, again I have always had the firm belief that you should not try and time the market. Now is a good time, yesterday was a good time, tomorrow is a good time.
But it's just psychological, isn't it? Where you feel that, okay, there was a time 3 years ago, 4 years ago when we started the show, and we ourselves saw some markets which were on fire. So, you know, within a year, that market would go up by 18-20%, and buyers were even, it's a large, the thing is, Harsh, that it's a very large financial commitment, right? So to get, if you say that you're buying right, it actually makes a lot of sense. Unlike a mutual fund where SIPs will average it out for you, in real estate, timing could actually save you lakhs of rupees.
Not really true, Manisha. I would like to take this example that you mentioned. What happened if I had bought it at the peak? Now, if I am staying in that premise, if that is what I had bought, and if I am staying there, really speaking, how has it affected me? What could I do today? I mean, had I waited those
if you had waited, then you would have got it a little bit cheaper, or that investment would have grown. So I feel that in real estate, at least making the mistake, even if it's for personal use, buying expensive is a costly mistake. It's capital which could be used elsewhere.
I think if you take it over a period and your own property is forever, I mean you may switch the property, but it is primarily forever. And because of that, if you look at it over a long period, I think this it really averages out. It plays out like a sip. It really plays out like a sip.
Harsh Rungta, such a pleasure to have you with us and just have this discourse on whether you can time real estate and what kind of real estate should one be buying at this moment. Pleasure. Thank you.
Thank you.